Good afternoon, traders. This is Christian from Tribeca Trade Group with your week ahead video coming live from Las Vegas from the big fight. I'm just kidding. I'm not live from Las Vegas. Um, anyway, just wanted to kind of go over the week ahead, some technicals, some things to watch for next week. Basically, a lot of market observations, what's trending, what's not, and we'll go from there. So this is just a quick look at our newsletter, which is out to subscribers with my list of observations, a few different things, in terms of market sentiment. We've talked about these for the last couple of weeks. The fear and greed index got to a really extreme level about a week ago, 17. Things like the VIX were up, skew was up, and the put call ratio was up. Basically, without going through these one by one, they've all kind of have returned to the mean a little bit. So for example, last week the fear and greed index was a 17. It's still pointing towards fear for market sentiment, but it's a 27, so it's higher than last week. And again, without going through these things one by one, but it seems like they've all kind of returned to the mean a little bit. So, and all those details are in our weekend newsletter if you want to go through those one by one. So, we'll start with the big average that everybody looks at, SPY. There's really not much to talk about here, or there's not much that you could really take away and say and really get a feel for overall market, for the overall market movement, other than we seem to be having some trouble trying to break out. This is more evidence, I think, if you actually look at the S&P futures, where I've got a couple trend lines that are drawn here, and basically you can kind of see that you've got a little bit of a comparison here. We did this kind of sideways movement at the end of June and in the beginning of July, and it seems like we've got the same thing going on here, but to a bigger extent and maybe a little bit of a deeper move. So that factored in with, again, it's a very seasonally weak time of year. It is what it is, especially the last week of August. It's usually more low volume, but maybe we could see a little bit of whipsaw move next week. Sometimes that happens when people are not expecting things. The one thing that we know is that there are more people that are on vacation, more market participants that are on vacation the last week of August than usual, but it doesn't necessarily mean that the markets are going to be remained exactly calm next week. So take that for what it's worth. Maybe if somebody does have a big trade to do, it could shift things around considerably next week. But if it doesn't, if it's really kind of, we don't get much of a shock and there's no new news, I would expect some pretty boring price action next week. But we'll see. You never know. Now, that happens sometimes. People always say that the day after Thanksgiving is always quiet because a lot of people are on vacation. But as we've seen, sometimes the day after Thanksgiving can also sometimes is quite volatile, because again, when something does happen, it could be triggered with a little bit of market volatility. All right. So that said, we still need to, we don't really have any buy signals. We don't really have any sell signals here. We're just below the 50-day moving average. That's the purple line on my charts. And we have one more week of August. We're in the August value area. We have no positive crossover in the MACD. So it's basically one of these kind of just sit on your hands a little bit. If you want to position a little bit further out, I am, the things that I have been buying have been longer term in nature and not such short term trades, and that's helped me in my trading. But again, if you kind of point back to here, notice where we got this MACD crossover in the beginning of July, and then we went. So I think if you are patient and you're observant, we may get this next break. Do I know this is definitely going to happen? No. But that's what I'm watching for. At the same side, and what would tell me if I'm wrong is if we start to break below 24.28. That tells me that we've got more market volatility. So I'm not going to make a prediction, as you see many people do. I see it all over Twitter this weekend, as usual. I see it on CNBC, and they've got people on talking about they know which way the market's going to go. I don't know which way the market's going to go. but I'm going to be ready for once I get some signals, and that's all you could really do. I'm not going to bring out the crystal ball. Q's the same type of same type of thing. They were a little bit weaker last week. We had one strong day, one day of trending, and then it was 3 days of basic chop. We had Thursday and Friday where we kind of where futures rallied a little bit, and as soon as the opening bell happened, the indices, the major indices were sold off. In particular, Qs were sold off, and a lot of the momentum names, some of the FANG names. Some of those higher momentum names really, I wouldn't say took a beating last week. They just didn't participate. SPY was up on Friday, was up 23 basis points, but a lot of those bigger names did not participate in that move on Friday. If you're looking for a FANG proxy, it's FTN. So you can see this FTN, which has the all the FANG stocks are the largest weight in the First Trust Internet ETF. This whole ETF was down 1%. So this looks like it's kind of cracking a little bit. It hasn't completely, it did not break the 50-day moving average again. It did this a couple times and recouped, but it did underperform last week. So it does look like there was some rotation. It looks like some of those winners or higher momentum names did get sold a bit towards the end of last week. And I can show you that in Toke. This is not exactly a momentum ETF, but the Apple is the biggest weight. You could see there was a big outflow last week on the 1 year chart. So there was some money that was taken. There was some selling that was taking place in the FANG names and in Apple. Again, this ETF, it's called Toke, but there was $150 million taken out of it. And you can see Apple, Microsoft, Facebook, Amazon, those are the biggest weights. Google, when you add the two Googles in there, that would also be one of the top weights as well. All right, so that's a little bit what happened. IWM, also just go through that one. It did get back to the 200-day moving average. This is not dividend adjusted. If I were to show you a dividend adjusted chart, you could see that the price is just above the 200-day moving average. I continue to think that this is a must-watch area. It's getting close to a 52-week, not to a 52-week. It's close to a bullish MACD crossover. It did not happen yet, so you want to be careful. You don't want to really anticipate these things too much because sometimes they get close and they don't happen. But I would be aware of that. Same thing with mid caps. Mid caps are also right at the 200-day moving average, so I think these are must watches. Maybe along with regional banks, which have underperformed. They're also way underneath the. Besides energy, one of the few sectors that are below the 200-day moving average. All right, so those are a couple must-watch areas for the market. In terms of sectors, every week I put together a U.S. sector scorecard, looking underneath the hood of the S&P. These are just the biggest sectors, so sector GICs is what they call them. For the last couple weeks, I would say weeks past, we saw a deterioration of the market breadth, and things went from there was about 8 sectors that were above the 50-day moving average. It was 7 or 8, maybe it was only 7. Were above the 50-day moving average. They dropped all the way to only 2 sectors that are above the 50, the 100, and the 200-day moving average. So really kind of got to the worst that we've seen it all in 2017. So this week, so again, this is what last week looked like. This week, we saw a little bit of improvement. Utilities still rank as they have been for over the last month. They rank as the best looking sector right now. And if you go to the technicals, you could see why I say that, because there's a lot of strength there. They made another 50. They made a 52-week high almost every day last week. Looks like they didn't do it Thursday, but almost every day a new 52-week high. A lot of strength and a breakout happening right now in the utilities. So they remain number one. REITs. Materials, if you watched the video last week, materials were the only sector to improve a week ago, so they continue to improve, and they're really. I have this is detailed in in the chart section of the newsletter, but they're knocking on the door of getting into value, and they've been doing this. It almost looks like a W pattern or a double bottom pattern, but they still need to get. We just have a MACD crossover here. I would like to see this for me to, in order for confirmation for me to go long, a break above 54.50 is what I'm looking at in the materials ETF. So these are names like Dow and DuPont. Let me just bring up the holdings here. Dow, DuPont, Monsanto, Praxair, ECL, APD, SHW, PPG, LYB, which we saw some call buying in last week, FCX. So the material names. We know what's happening with the metals space. You could look at DBB, the base metals ETF, which continued to rally last week. Very, very strong. DBB, the base metals ETF, is zinc, aluminum, and copper. All three of these have been breaking out. So we're right at this level right now of a previous resistance. So we'll see what we can do in terms of the base metals if they can get over that multi-year high. Copper's been doing it. You see a couple of VPOCs being taken out. You've got another one up here further. Also on the weekly chart, we've taken out this. So personally, how I use the version point of controls is sometimes we see a reversion. So I wouldn't be surprised if copper comes in a little bit in the next week or two. Again, this is the weekly chart. So we hit this pretty nicely. We tagged this VPOC. We have no more above it. So again, I wouldn't be surprised that this comes in a little bit. If it happens to continue above, I would say very, very strong. But this is sometimes the case that we see a reversion back after taking one of these out. All right, so that's materials. REITs, I also think are interesting here. We'll go back to we'll bring up the IYR chart. They did see a little bit of sector inflows last week. So they're right at the cusp. If we stick with this weekly chart, 81.31, that's the level I would watch for a breakout. So again, yearly value areas on the weekly chart are very important. Bigger resistance and support levels than on the daily. If we look at the daily chart, it's kind of the same thing. You can see there's multiple levels right in here that we need to get through. But if it does it, I would want to be long here because notice this chart, we're not that far over the 200-day moving average. We could see a move back up to 85 ish. All right, so that's another one that I'm watching. Tech still seems to be hanging in there above the 50-day moving average, and really not much else changed. Industrials improved. They dipped briefly below their 100-day moving average. They're now back above the 50 and the 200, just not above the 50. So another sector maybe to keep an eye on. All right, best performing sectors last week. It was really steel and metals and mining. You could see GDX up there as well. Gold did pretty well last week. Gold was up. Well, gold was up about 0.4 of a percentage point. So, I've talked about gold a couple times here. It continues to stall out right at that 1,300 level. So it's right there, the 1,300 level. It seems to be holding in, so it hasn't been able to do it yet. You had one failure here, but really not too much of a move back. So it's doing a lot of consolidation here. So it could be ready to pop, or it could be ready to sit back down. But I'll wait until we get I'll wait for that confirmation above the 1,300 level. GDX, I think, continues to look interesting. It really just hasn't had a lot of momentum. But it is sitting above the 200-day moving average, and I am long the GDX Gold Miners ETF, which I got long on the break of the 200-day moving average. We'll see what it does, and I like the portfolio. As I've said before, I like the portfolio diversification of having gold miners in with your portfolio. I'm not going to go through the international markets one by one, but man, you just don't really hear too many people talking about some of these international markets that are just doing unbelievable. Poland, for example, this is the Poland ETF. I've made reference to this a couple times. I don't know. I never pulled the trigger on going long Poland. There's also EPOL there's two Poland ETFs, but this is one of your best performers all year long, up 50% year to date. So nobody really giving it much attention, and it just it kind of hit this touch back close to the 50-day moving average and new 52-week high. So you have to remember, like, the information that we get on our financial, watching financial media just doesn't really cover what's really going on globally, and what areas are really moving to the upside. So Poland, one of your best performers year to date, up another 5% last week. Emerging markets, which I've talked about extensively, I'll cover a little bit more this week, but you have China, continuing to be extremely strong, up 5%. Turkey was also up 5% last week. So again, there's just a lot better things I think going on right now in U.S. markets, and you have to kind of broaden your horizon. If you're just watching, again, if you're just watching a couple of the channels that's the TV broadcast, they don't cover any of this stuff. What they cover all day long is whether or not a tax plan is going to happen, and a rally off of that. And again, I throw my opinions here a little bit in these videos, but they continue to think that's the only way that the market is going to rally. Well, why have all these other areas rallied? Is it because of the tax plan? Are they, so why I demonstrate this, or why I go over this, is there's plenty of other things that are going on besides just that agenda that they keep bringing up over and over and over. There's a lot more money to be made in these markets that have really been outperforming the U.S. all year long. So I do a section every week that summarizes all the ETF fund flows. Why do I do this? I want to know where the money is being put to work. I want to know if there's people are taking out money, if they're putting in money, if there's new money being put to work, or if it's just being rotated around. So a couple observations that we saw from last week. Some money, financials. Looks like the dip was bought. This was the financial ETFs saw the biggest outflows of any sector 2 and 3 weeks ago. So they also, this week, they actually had the most inflows. So I think combined 2 weeks prior to last week, they saw $1 billion of outflows. So they got some of that money back. Really, what was interesting in U.S. sectors was how much money was taken out of consumer discretionary. This was the largest outflow of 2017. You could see right here in XLY, boom, you could see the volume, and you could see this big red candle. So there was a lot of money that was taken out of this. For the week, the whole group, it was $800 million that was taken out. Keep in mind, Amazon is your biggest weight in this consumer discretionary ETF. So this is now, below, the consumer discretionary has been one of the best performers of, from when the bull market started back in 2008 ish. So it looks like it's faltering here a little bit. It's the first time we've been underneath the 100-day moving average since the pre-election dip. So something to be mindful of that money being taken out. International was kind of quiet. The U.S. equities finally saw some big inflows. Most of those were just two funds, just SPY and EWM. They actually accounted for they accounted for almost $10 billion. So just those two funds alone. So you could see, things like consumer discretionary, healthcare had outflows, which brought the net inflows in U.S. equities to $6.4 billion. International flows were quite they did post inflows, but they were small. They were pretty muted. International developed markets continue to be where the money has been going. So again, what is international developed markets? It's mainly Europe, European countries, and it's also Japan. VEA was the biggest international ETF inflow, about half $500 million. So VEA, we can look at a chart of this quickly. So really has never broken the 50-day moving average. It's touched it a couple times here and has been a nice place to kind of add money. So I would remain long international developed markets until it breaks the 50-day moving average. This is another ETF that's caught my eye a couple times this year. You can see the volume last week and the inflows. So this is value, international developed value. So I'll show you some of the components in this, but you can see it's kind of similar to the VEA chart. But again, it's been seems like buyers come in around the 50, or buyers did come in this last touch of the 50-day moving average. So kind of an interesting looking ETF. You can see the companies that are in EFV, maybe an ETF that you may not have heard of before. It's HSBC, it's Novartis, it's Toyota. Some energy names are in there too: Royal Dutch Shell, Total. And a lot of healthcare. Sanofi's in there, as well as Novartis. A couple industrial names in here as well. But there's the names that are in this ETF. A little bit different than VEA, maybe a little bit less tech, which Samsung is one of the biggest holdings in VEA. So a little bit less tech, I would say, in EFV. All right. So fixed income last week, they posted inflows of $2.1 billion. A lot of corporate bond ETFs, including high yield. J&K was the biggest inflow in fixed income last week. Added $854 million. LQD, which is investment grade bonds, added $279 million, and a couple other intermediate and short term corporate bonds also added assets last week. Gold continues to see, for the second week in a row, has seen some inflows. GLD, GLD and IAU added $324 million combined. Last week they added $513 million, and that's pretty new. Gold has not really seen much inflows in all of 2017, just recent inflows. VIX, I've talked about the VIX exchange traded products in the last couple videos that I've shot. This one, there was no real trend. Since there was a spike up in VIX, what have we seen? We saw a lot of outflows in VXX and UVXY, and inflows going into inverse VIX products like SVXY as well as XIV. Last week was different. They all saw inflows, so now you can't really make too much of a conclusion about what people are doing here. Both VXX, UVXY, SVXY, and XIV, they all saw inflows. So it could just be people are picking up on how much they're moving on a day-to-day basis and going in on them. All right, so let me get into the chart analysis, some of which we've already covered as I've been going through my weekend, the Tribeca Trade Group newsletter, which again is available for purchase. If you are a subscriber, this comes included with your membership. So for both part-time and full-time members, you can get these newsletters included with your membership, and you can kind of go over the details at your leisure. So what I wanted to talk about, which this is a chart that I've mentioned a couple times to Tribeca Trade Group members over the last couple weeks, and and especially basically just in 2017, is that's how I've been positioned. I have a lot. I've got a lot of holdings in some of these ETFs, and you've seen them. If you've been a member, you've seen me put them on in the systematic cash trend portfolio, and I've added to dips. I added Singapore last week, which is EWS. But basically, what I want to show you here is, this has really moved in trends over, for basically from 2004 to, this thing has moved quite a bit. But the overall trend from 2004 to 2010 was up. So EEM outperformed SPY. Again, this is a chart that is a ratio spread between emerging markets and SPY, and you can see how emerging markets outperformed for basically about 6 years. Well, and this is not small performance. This outperformed by 105% by going long EEM and short SPY. If you did this when the trend flipped, you could see in 2011 it started to work the other way. So EEM is in the numerator, SPY is in the denominator, and you could see from 2011 to 2015, SPY outperformed, and it outperformed EEM by 84% over that time frame. So This is another, pair trades, I think, in sideways markets, which we're kind of experiencing for the last couple of weeks right now, some consolidation. Pair trades are another way to kind of be in the market, but not be overly exposed because you're just looking for one to outperform the other. So if the whole market goes down, as long as your as long as you're the one that you're long, as long as that moves up or doesn't go down as much as you're the one that you're short, usually does, will earn you some returns. So you have to think about it in those terms. So what we've seen the last year, since this downtrend ended, we've seen the sideways action, and EEM has been basing versus SPY, and now you could see it start to outperform. So, in the last couple months, emerging markets have really started to outperform. And that's something that we cover every day in the morning. We look and we see how much the Hang Seng is up compared to our markets. So, for while this lasts, I want to be long EEM and short SPY. I think that's the pair trade for as long as the price of this ratio is above this dotted line or above, what is it, about 0.18. If you have the software to kind of put these two together, I would say 0.18 is the ratio that I want to be long against anyway. We talked about EFV. RSX is another name that I added to, or excuse me, I initiated a long last week. RSX was one of the only, the Russia ETF was one of the only names that international names that was below the 200-day moving average, country-specific ETFs. But now it's starting to, it had some nice performance last week and is starting to put some distance between itself and its 200-day moving average. So I got long on this move above the 200-day moving average, and I'll be long as long as it stays above the 200-day moving average. REITs, we talked about those already. XBI I talked about in one of the videos last, I think on Thursday night. So new MACD crossover, real nice performance on Thursday. I actually started a small position in XBI as it was down 1% and gave back some of those gains on Thursday. And I will be long as we're above this green line here, the bottom of value. But again, I thought, rather than add on an update, on a day where we're down, where biotech was down, I added to rather than always adding positions when things are up. Materials, we already talked about that one. I'm not sure if I don't think I touched upon the Greek ETF, but just to kind of show you, and I've got a few year or multi-year chart here in the Greek ETF, just to kind of show you where this thing went from. It went from 22 bucks. It's again long base, right around this $8 level, and it broke out above its 200-day moving average here, but it hasn't been running up by leaps and bounds. So again, a name to, I think, hold in cash rather than in options, considering it's been grinding higher. If we zoom into Greece and show, since that's a multi-year chart, you could see that it had a nice bounce right on the 50-day moving average. So I like Greece here, and I continue to like a lot of international markets over US right now. And we covered more of these I have charts displayed. I'm not going to go over every international or every emerging market, but the Latin America charts look great. I've been long EWS, which is small cap Brazil, since it dipped a few months ago. The Hong Kong ETF, Singapore, these all look like pretty good charts to me. So we did more of a deep dive into emerging markets, but you have to be a member of Tribeca Trade Group to see the analysis that we give the subscribers on a day-to-day basis. So check us out. If you're not a member, TribecaTradeGroup.com. Put in coupon code TTG for half off the first month. Thanks for watching the video and enjoy the rest of your Sunday.